Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, more central banks are downgrading their outlooks. But firstly, US durable goods orders rose a tiny 0.8% in March 2009 from March 2018. New orders for non-defence capital goods actually fell 5% in the same periods. These are worrying data. The US home ownership rate has been reported at 64.2% in the latest quarter, identical to the rate a year earlier. And there was another regional factory survey out overnight, this one from the Kansas City Fed. Like all the others, this also shows an expansion that is withering. A year ago, their factory index stood at 24. Now it's at 5. The Bank of Canada reviewed its official interest rate and monetary policy positions yesterday, deciding to leave the rate unchanged at 1.75%. But in its review, it had a glum assessment of Canada's future growth, saying 2019 will only grow 1.2%, rising to only 2% in the next 2 years. It said depressed business investment intentions are the biggest challenge for both it and the government authorities. And it doesn't see the international trade picture picking up anytime soon. Pointedly, they see an even worse situation in its big neighbour, the USA, expecting their growth to be lower than Canada's at just 1.7%. And the Bank of Japan also published its monetary policy review, and they too held their official rates unchanged as expected. They are far from their inflation goal, and easy money policy will continue well into the future. The South Korean economy has unexpectedly shrunk by 0.3% in the first quarter of 2019, caused by a drop in capital investment and falling exports. In China yesterday, the Shanghai equity market fell a startling 2.4%. Perhaps a US report slamming China's efforts to control IP theft, piracy and counterfeiting is undermining the chances of a US-China trade deal. In Europe, Germany's two largest banks, Deutsche Bank and Commerzbank, have called off merger talks, something sure to frustrate policymakers in Berlin who are pushing for it to bolster the two weak but crucial banks in the country. The US Treasury 10-year yield has drifted down by 4 basis points over the holiday break and is now at 2.54%. Gold is up $6, now at $1,278 an ounce. And US oil prices are down sharply today, well off their recent highs, now just over $65 a barrel, while the Brent benchmark is just over $74 a barrel. And the Kiwi dollar has weakened by half a cent and now at 66.2 US cents. Actually, since the start of April, the Kiwi dollar has declined 2 full cents against the greenback, a 3% retreat. On the cross rates, we're at 94.4 Aussie cents and recovering all the collateral damage from the Aussie CPI miss. Against the euro, we're at 59.5 euro cents, which is a small gain. That puts the TWI back at 71.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.